Silver just smashed through $75 an ounce for the first time in history, outperforming gold, shocking markets, and rewriting the rules of precious metals investing. Is this the beginning of a new supercycle or the most dangerous top ever? Stay with me because what's happening right now could change how you invest forever. Today's video is not hype, it's history. Silver has officially crossed the $75 per ounce mark, reaching levels that very few analysts believed possible just a few years ago. Gold, platinum, and palladium are also at record or near record highs, signaling something much bigger than just a normal rally. In this video, I'll break down why silver exploded higher, what's driving demand behind the scenes, how gold, platinum, and palladium fit into this move, what this means for investors, traders, stackers, and industrial users, and most importantly, what to expect next in 2026 and beyond. Let's dive in. Silver makes history. On Friday, silver surged past $75 an ounce for the first time ever, briefly touching new all-time highs before settling slightly lower. To put this move into perspective, silver is up more than 150% year-to-date. It's dramatically outperformed gold, and it's one of the strongest performing major assets of 2025. This is not a normal market move. This is a repricing event. Silver spent over a decade trapped in a range, often overlooked, underowned, and misunderstood. But in 2025, that changed decisively. Silver is no longer just a cheap version of gold. It has reclaimed its identity as both a monetary metal and a critical industrial resource. Gold, platinum, and palladium joined the party. Silver wasn't alone. Gold surged to new record levels above $4,500 per ounce, marking its strongest annual performance in decades. Platinum jumped sharply to fresh highs, while palladium followed closely behind with powerful gains. What's important here is confirmation. When multiple precious metals rally together, it signals strong macroeconomic forces, shifts in monetary policy expectations, and rising concern about inflation, debt, and currency stability. This is not speculative froth, it's broad-based flight into hard assets. The interest rate effect. Why metals are winning. One of the biggest drivers behind this rally is interest rates. Markets are now pricing in multiple US rate cuts ahead, and that changes everything. Lower interest rates reduce the opportunity cost of holding non-yielding assets, weaken the US dollar, and increase demand for stores of value like gold and silver. When real yields fall, precious metals tend to thrive, and that's exactly what we're seeing now. Geopolitics and global uncertainty. Beyond monetary policy, global instability is playing a huge role. Ongoing geopolitical tensions, trade uncertainty, and shifting alliances are pushing investors towards assets that cannot be printed, sanctioned, or devalued overnight. This has accelerated central bank gold buying, investor rotation into tangible assets, and renewed interest in silver as a strategic metal. When confidence in paper systems weakens, metals regain relevance. Central banks and institutional flows. Central banks continue to buy gold at record levels, but silver is benefiting indirectly. Why? Because silver is far cheaper per ounce, offers higher volatility and upside, and acts as a leveraged play on precious metals' strength. Institutional investors who missed gold's early move are now turning to silver as the next logical alternative. Industrial demand, the silent force. Here's where silver truly separates itself from gold. 60% of global silver demand comes from industrial uses, including solar panels, electric vehicles, advanced electronics, data centers, artificial intelligence infrastructure. These sectors are not slowing down. Silver is essential, and demand is largely price elastic, meaning higher prices do not significantly reduce consumption. Manufacturers cannot substitute silver easily. If they need it, they pay whatever price the market demands. US silver becomes a critical mineral. One of the most underreported developments this year was silver's addition to the U.S. Critical Minerals List. This designation highlights silver's strategic importance, encourages stockpiling, and tightens global supply availability. Ahead of potential trade or tariff decisions, large volumes of silver were moved into U.S. warehouses, creating shortages elsewhere. This supply dislocation helped fuel the price surge. Supply deficits and the physical squeeze. Silver has been running structural supply deficits for years. Mining output has struggled to keep up due to underinvestment, declining ore grades, and rising production costs. At the same time, demand keeps growing. This imbalance created what many analysts describe as a real physical squeeze, not just speculation, but genuine scarcity. Short sellers were caught off guard, and industrial users were forced to chase supply at higher prices. Momentum, technicals, and market psychology. Another major driver was momentum buying. Earlier this year, the gold-silver ratio reached extreme levels, signaling silver was deeply undervalued. Once key resistance levels broke, traders piled in, algorithms accelerated the move, and price discovery took over. This turned a relative value trade into a full-blown breakout. China and global demand shifts. China also played a key role. Weakness in real estate and domestic investments pushed Chinese investors towards gold, silver, and hard asset as stores of value. This added another layer of demand to an already tight market. Looking ahead to 2026, what comes next? So, where do we go from here? Short term, volatility is likely. Consolidation would be healthy. Pullbacks are normal after explosive rallies. Long term, structural demand remains strong. Supply constraints are unresolved. Monetary and fiscal risks persist. Even if prices cool temporarily, the fundamental story for silver remains intact. Risks to watch. No market goes straight up forever. Key risks include slower AI or tech investment, policy shifts on tariffs, profit-taking after extreme gains. Also, silver is no longer cheap relative to gold, so expect larger swings. How investors can access silver. Silver exposure comes in many forms: physical bars and coins, ETFs, futures contracts, mining stocks. Each has its own risks and rewards. There is no one-size-fits-all approach. Is silver still worth owning? Silver's 2025 rally will go down as one of the most dramatic revaluations in modern financial history. It's no longer just a speculative metal, it's a strategic asset. Whether you're a long-term holder, a short-term trader, or someone just watching from the sidelines, silver deserves your attention. If you found value in this breakdown, hit the like button, subscribe for more deep dive market analysis, and comment below. Do you think silver's rally is just beginning, or are we near a major turning point? Thanks for watching. See you in the next one.